Investors and traders, welcome to the channel Market Chart Pattern. Today is 19th of November 2023, and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US stock indices as we always do. We will also cover the bond market, mainly through the eyes of the long bond futures, which is the 30-year bond future duration futures chart. And also we'll take a look at the 10-year treasury futures chart as well. And we will briefly take a look at the dollar index as well, and then we'll cover the main broader indices for the United States market. This video is for educational purposes only, and it is not a financial advice. So let's start by taking a look at the bond market. So this is the chart. This is the daily chart of the Treasury bond futures. It's also known as the long bond future because of its 30-year duration, which is pretty long. So one of the key things is that, as we discussed in our last video, which we did some time ago, apologies, I was not able to make a lot of videos because I was under the weather and I didn't have my voice. Now it's coming back, so that's good. So we had been actually talking about this level 107 because we expected a nice rally to begin from here, which in fact did take place. Then we were looking at this bearish symmetry in this swing down. That bearish symmetry has been broken, and what we are really looking at is at about 117.13 level. That's the 38.2% Fibonacci retracement. This is where we believe there's going to be a fair amount of resistance present, also because of the structure there. Structure here. Let me actually try painting this. So a structure here. Oops, let me try getting something better. Let's get a highlighter. So here, structure here, and structure here. So that's one thing. And the other thing that we were looking for was that one of the key things to also watch is where the market is right at the moment. So if we just draw a retracement, it's right at the 61.8% Fibonacci retracement. Now the good thing is that it broke out of the bearish symmetry and also the 78.6% Fibonacci retracement, but this 61.8% retracement level could give this some trouble. And it's possible that we see some sort of a pullback in this market, and which is also likely to impact the bond market as well. So if we move to the this is the 10-year Treasury note futures, similar kind of pattern formation, moving higher. It has broken above the bearish symmetry, which was present here, so that's a nice sign. However, it hasn't broken by a lot. One of the key things is that where it is right at the moment, it's here at the structural resistance. The 30-year bond futures contract is actually a little bit weaker because in the 10-year Treasury note we have already done that. So here we can see some sort of a pullback, perhaps a little bit lower, where it's able to catch up with this 20-day rising moving average. From momentum perspective, it's still, momentum is not good because the price is below the 200-day moving average. Just quickly looking at the weekly chart, what we can see is that we have had a few consecutive bullish candles for the weekly chart, and it went right into the 20-week moving average, and that's where we are also seeing some the sell-off, and also from the structure here. So again, pressure in the bond markets is likely to impact also the stock markets. So let's take a look at the dollar index. So the dollar index is an interesting one because what we have seen a rising the futures treasury market. So in fact, the rates coming down and the price moving higher, we are seeing a weaker dollar. So that's interesting. And what we identified was this zone. It didn't really quite get there, but that's where it formed a double top formation, and now it's just moving lower. It's approaching its 200-day moving average, where we could potentially see around that level some support come in. So it's possible that as the bond futures that we have seen approach these level where we're expecting some resistance, some support could come in for the dollar as well, which will also impact the stock indices as well. So right here where we are, around 38.2% Fibonacci retracement of this move swing higher, and we have the 200-day moving average around here, we could see strength come in the dollar index. Now if we move to the stock indices, let's actually do the NYA first. So this is the New York Stock Exchange Composite Index. It's not something which is tradable, but it's a really broad index. And this is approximately 2,500 securities, I believe, including the ADRs. And that's the reason I want to take a look at that, because it also includes the ADRs. There are, bigger indices, broader indices available, but I think we would like to restrict ourselves for the New York Stock Exchange in terms of the broader indices for now. So here what we are seeing is it had a nice bounce higher from this symmetric move here, and where it is right now is at 61.8% Fibonacci retracement. So here it's just consolidating over the course of a few trading days, and we could see perhaps more consolidation and also possibly even a move lower or a pullback in this index. Maybe it come down to where the 200-day moving average is, or maybe it's possible to even that it completes its 38.2% Fibonacci retracement around 15,380. That's also a possibility, but by the looks of it, the 61.8% Fibonacci retracement might be providing it some resistance for now. This is the S&P 500. This is the cash index. And here what we see is that also the market is just consolidating over the course of last 3 trading days, and it's doing that right at the 78.6% Fibonacci retracement. So you see this pattern formation. You go and watch our older videos, and you will see what this pattern formation was that we were watching. I'm not going to go into the details of that in this video. I want to keep it a little bit shorter. So it's again what we expect is some consolidation, move back, fill in this gap. Maybe the market begins to gain some energy before it's able to move higher and take these highs out. So moving to 43.65 could be expected. It's just the 38.2% Fibonacci retracement. The market really needs to recover out of this 78.6% Fibonacci retracement in order to move higher and tackle these highs around here. Let's take a look at the NQs. So here we go. So NQs found nice support from this pattern formation we were watching for. It went right into the zone we were expecting to get into for a really good bounce at least, and this is what we have seen. And now where it is just forming, it's not a double top formation because there is no confirmation at the moment, but it's just gone and tackled these highs out. In fact, I made an attempt to take these out, but it could meet some resistance here as well, and we could see a pullback right into about 15,300 level perhaps. Let's just quickly take a look at where the 38.2% Fibonacci retracement is. Yeah, there you go. 15,300 is something that the market could actually pull back into. And then let's also quickly take a look at this one on a weekly chart. This is how it looks like on the weekly chart. So clearing these highs, obviously the next target becomes the this high. This is the I believe the all-time high. So this could be in the making as well, but we'll have to wait and see. But it looks like that over the short term, next few trading days, maybe a week and a half, we could see some further consolidation to pull back in the equity markets. Let's take a look at now the Russell 2000. So the Russell 2000 has been a very interesting one. We like to see it on the weekly chart, but just on the daily chart, it has done this ABCD 1-to-1 price projection right into the 50% area, and that's where structural resistance is as well. So this is another reason that there's a possibility that these markets are actually going to pull back, and it could pull back right into 1760, which is 38.2% Fibonacci retracement. Taking a look at this on the weekly chart, so wow, look at this range bound market. It's been range bound for a very, very long time. Eventually it's going to break out either to the upside or the downside. We'll have to wait and see, or it could just keep on ranging for even longer. And what we have seen is that it rallies, forms this double top formation here, triple tops here, So just the upper range of the upper boundary of the range, and then a similar pattern on the downside, and just doesn't break out of it. It just keeps on, ranging in this quite a wide range, in fact. And then it just touched this 20-week moving average, found resistance from here as well. And on the daily chart, we have seen the ABCD one-to-one price projection. So again, we would think that maybe this market might actually pull back right into this 1760 level, and then we'll have to assess the price action going forward from there. Let's take a look at the YM, which is the E-mini Dow Jones futures. Excuse me. And here we have a similar thing what we are seeing in the S&P 500. The market is right at the 78.6% Fibonacci retracement, so the market really needs to clear this before it's able to tackle these highs out and move higher. One of the other things is that one of the patterns that we were looking at in the NYA, we saw a symmetry in the price, and we have a similar sort of symmetry available in the Dow Jones as well. And then from that bottom, we have seen a pretty strong move to the upside, and that's just been absolute fantastic move, and right into the 78.6% Fibonacci retracement, where the market is finding some sort of resistance, perhaps pull back right into this juncture where we have the 20-day moving average and 200-day moving average. They're sort of coming together, so the momentum still remains some sort of negative, although there has been a fantastic move in the price to the upside. So maybe some catching up might take place, and we see some pullback. And also what I've shown you in the bond market, and as we are also approaching some support points in the dollar index, with all these things coming together, there is a chance that over the course of next few trading days to a week we can have, perhaps we might see some sort of a pullback. Now one of the interesting things is that with Thanksgiving coming up, usually market begins to rally into the Thanksgiving. That's a statistical edge that we have, so we'll have to keep on watching. It's possible that the market consolidates, and there could be before we reach towards the holiday weekend, the market might actually pull back nicely into some of the support regions that we are watching for, and then just day before begins to rally. So we'll have to wait and watch and see, and assess the price action. So this is what we are looking at in these markets. So thank you very much for watching the video, and if you found this video of educational value, then please do hit that like button. And if you like our analysis, how we look at these markets from a pattern recognition perspective, technical analysis, then please do subscribe to the channel as well. And if you do, then do hit that bell icon button. That way you will know when the new videos are posted. Thank you very much. Have a fantastic weekend. Speak to you guys soon. Good luck and good trading.